What's up, everybody? Welcome to Heresy Financial. My name is Joe Brown, and today we are looking at the fact that PayPal recently decided that they were going to start supporting Bitcoin, and that Venmo, their product Venmo, is basically going to become a crypto wallet. And so we're going to look at that move, why they did it, and what that means for some other companies moving forward, what that means for Bitcoin, gold, cash, currency. Let's dive in. All right, so if you weren't aware, yesterday I released a video about kind of the monetary reset, the new Bretton Woods agreement or new Bretton Woods moment that people are talking about, how pretty much every central bank around the world is moving towards releasing their own central bank digital currency. And so this recent move by PayPal is very much in line with that. They actually talked about supporting central banks in their move towards having their own digital currencies. So if you'd like an explanation of what that means and how that might impact you, go back and watch that video. And so today we're looking at what the impact is of PayPal moving into the Bitcoin space. I think number one, and this is the most obvious, it caused a little bit of a pop in the price of Bitcoin. Now, this has been expected from a technical standpoint. It looked like Bitcoin was getting ready to jump. As of now, as of the moment that I'm recording this, Bitcoin is currently at 13,114 US dollars per Bitcoin. And so it did pop above and is currently holding above that $13,000 mark. And it was quite a bit lower than that even just a week ago. In fact, I think it was about 2 weeks ago now that I made a video about why I put 5% of my overall portfolio into Bitcoin. And that was right before Square had announced that they were putting Bitcoin onto their balance sheet. And so Square is a company, they're owned by Jack Dorsey. That's one of Jack Dorsey. He's Twitter, and Square is one of his companies. They do peer-to-peer payments just like PayPal and Venmo. They also do stock investing and Bitcoin investing. And so what they announced was that some of their cash that was on their balance sheet as a company, about 50 million of that they put into Bitcoin. And so my announcement was right before that, and that was like 2 weeks ago. Bitcoin is at like $10,600. Right after the Square's announcement, popped up to a little bit over 11,000, and then it's been slowly kind of accumulating right there. And then boom, as soon as PayPal's announcement came out, it pushed it over 13,000. And so I mentioned in that video, and it still looks like this is the case, that we're going to start to see more and more mainstream corporate adoption of Bitcoin. And so more banks, there was a bank recently, and I think it was in Wyoming. Don't quote me on that. I'll put it up on the screen, whatever state it was in. But Kraken, they are a cryptocurrency exchange, and they were able to get a bank charter in the state. And so we're going to see more and more corporate adoption of cryptocurrencies specifically for Bitcoin, more and more corporations and companies using Bitcoin to put on their balance sheet in place of cash because of the risk to reward ratio. When you look at something like cash or treasuries, the downside risk from inflation, your purchasing power being eroded, is there. Quite a big amount of that inflation risk is there, and there's no upside potential to it. Versus kind of the opposite with something like Bitcoin, where the downside potential is you can lose everything you put into it, but the upside potential 30, 40, 50x potential return. And that's only going to be realized faster and faster as more widespread adoption. This is what I've talked about Bitcoin from the beginning, that it's possible Bitcoin becomes money, becomes used as money in the future, as mainly as a reserve asset, like the ultimate savings account. It's possible, and one of the main drivers of that happening will just be people learning about it and then adopting it. So it's not really something like gold, because gold is already at that level of a really, really, really solid, historically, reserve asset. So you don't have a lot of upside potential with gold. You also don't have much downside potential with gold. It kind of just is steady. Your purchasing power, what you can buy with your ounces of gold, stays steady over time for thousands of years. You can buy the same amount of stuff. You can live just as long today on, 100 ounces of gold as you could 2,000 years ago on 100 ounces of gold. Maybe a little bit longer today due to technology and general efficiency, things getting a little bit cheaper over time, like food production. And so ultimately, the amount of stuff you can buy with gold doesn't really change much over time, slightly increases. And that's over, I'm talking long periods of time. I know that there's short-term volatility. Bitcoin is the opposite. You're basically making a bet with Bitcoin that it will be used like gold in the future. And if it is, if it does end up getting used like gold in the future as a reserve asset, there's a lot of upside potential. The amount of stuff that you can buy with 1 or 2 or 3 or 4 or 10 Bitcoins, that will go up dramatically over time as its adoption increases, strictly because there's a very little amount of adoption for it currently today. It's, if you look at its market cap, it's about the size of, a regular mid-cap company. And so if it was to be used as a reserve asset where, central banks and countries and people and institutions are using it like they currently use treasuries or gold or cash today, then its value has to grow dramatically. Its price in today's dollars has to grow dramatically. And so you're seeing more and more adoption of this, especially as there's a push towards digital currencies by central banks. And so PayPal, just one more company that is jumping in line with companies who have already started to do this. And so it's a domino effect. It's almost like, as more and more companies do this, it pushes the price up, and then it makes other companies, especially tech companies, look around and say, hey, if they're doing this, we might not want to wait too long before we start to, put our toes in the water here and feel it out for ourselves, because the longer we wait, the more painful it will get, the higher the price will go. And so I fully expect to see a lot more of this. Now, does PayPal jumping in here mean that Bitcoin's going to 400,000? No, it just makes it a little bit more likely. And so it's still an asymmetric bet. You still have a 30 to 40 times 30 to 40x upside potential with a 1x downside potential. You can lose everything you put into it. As long as you didn't use debt, then you can only lose what you put into it, and then you've got that big upside potential, and that's still the case. And it will become more and more realized as companies jump in. So where does this leave something like gold? Well, if you're going to make a bet on what will be used as money in the future, the only information that you can go off of is the past. And I get it. The past is no guarantee of the future, and nobody has a crystal ball, and technology changes things. I get that. But there's a reason why people, companies, and countries have returned to gold hundreds of times every time there's been a monetary collapse. We've had credit money before, we've had virtual money before, we've had paper money before, we've had rice money, we've had, all sorts of different monies have been tried in the past. And ultimately, when they fail, civilizations resort to using gold or silver. And there's a reason for that. Number one, they have properties that Bitcoin has, right? It's very, very difficult to counterfeit them. It's very difficult and costly to produce more of them. And that's the same with Bitcoin today. I understand in 100 years, no more will be made. There won't be any inflation, but as of right now, it's, costly from an energy standpoint and money standpoint to produce more of them as a miner on the network. And so same with gold and silver, they're difficult and costly to produce. And so that means their inflation rate stays low. If somebody wants more gold, they have to go make it or buy it or produce it or mine it and refine it. They can't just print it create more of it by printing more zeros on a piece of paper. And so it can't be destroyed. It doesn't rust. It doesn't decay. It doesn't erode. It's stable. It preserves itself over time. And so, these are all things that are true of Bitcoin. The only thing, and Bitcoin arguably by its technology does these things just a little bit better than, gold and silver. Now, the only thing that Bitcoin doesn't have over gold and silver, which does give them an edge, is, two things actually. The first thing is the fact that its only purpose is money. And gold, it can be used for a lot of other things. Silver can be used for many more things. And so there's a commodity value, a use value outside of money for gold and silver, whereas there is not for Bitcoin. The only purpose of Bitcoin is money. That is the sole purpose of its technology. And it's not good for anything outside of being used as money. And so Some people say that's an advantage. Some people say that's a disadvantage. We'll see. Nobody knows yet. Historically, it's a disadvantage because there have been other forms of money created and used, and people resort to gold and silver. And it seems like the fact that they can be used for things other than money are what gives it some of its intrinsic value. And so, other than its monetary properties, Bitcoin has no intrinsic value. Its intrinsic value relies solely in its monetary usefulness. And so we will see if people enjoy that and want that. Historically, when civilizations collapse and monetary systems collapse and reset, people resort to gold and silver for that reason, that those metals can be used for with other purposes. And so that's the one thing that the one thing that Bitcoin doesn't have that gold and silver have. And the other thing is history. So when you look at something like your random skyscraper on your downtown city corner versus the pyramids, if you're going to make a bet on which one will last longer, you're going to say the pyramids. Mathematically speaking, the most likely age of any given item is 50%. Statistically speaking, if you have no other information to go off of, the best guess of where you are in the life of any given item is 50%, because statistically speaking, you're just as likely to be at something that is at 1% of its total lifetime age as you are to be at 99% of its total lifetime. And so given all available objects and all possible outcomes, that means the average is going to be 50%. And so what I'm getting at with that is that gold has a lifetime of about 3,000 years as money. And so without any other information, you would expect that gold would serve as money for another 3,000 years or so. The pyramids have been around for, 5,000 years, 10,000 years, nobody really knows, somewhere around there maybe. You'd expect them to last about that much longer, because anything that, an earthquake or wind or rain, or big storms or different types of governments, regimes, conquerors, the pyramids have stood the test of time. Gold has stood the test of time. All of the potential shocks that could happen, it's gone through all those things and it's survived and it's shown to be robust against those things. Whereas something like your average skyscraper or a new fiat currency, something that's 50 years old, like the dollar, because the 50 years old dollar is different than the dollar we have today, is different than the dollar prior to 1971, and so. Ultimately, when you look at something, you'd expect you to be somewhere about halfway throughout its lifetime. And so gold might be used as money, and it might Bitcoin might be used as money, and it might replace gold, for the next thousands of years. Statistically, it's not as likely, and that's why it has such an upside potential, because it's still at its early phase, and so it's worth it to put a little bit of money in it just to bet on that. And so those are kind of that's basically more and more adoption by companies like PayPal validate it more and more. Central banks that try to create their own digital currencies, that validates Bitcoin even more. It also validates gold, because the central bank digital currencies don't have the hardness to them. They will be inflated, and they'll be used to censor transactions and monitor transactions, whereas using gold and Bitcoin don't. And so the central bank digital currencies actually validate gold and silver's value, and so those are bullish wins for that. And so ultimately, right now, I'm much more heavily weighted in gold than I am in Bitcoin, but there is a place in the portfolio for both. And so that's the outlook on Bitcoin right now. It's above $13,000 right now, and so I still expect by the end of the year to see it hit that $15,000 mark, and probably some of the tailwinds driving it there will be one or two more major companies jumping on board with Bitcoin. As always, really appreciate you guys. You truly are the best. Thank you for watching. Have a great day.